Hello, my YouTube friends. Today I'm going to talk about 9 stocks that I personally think one has to own in their portfolio. 9. So forgive me if it's a long video, but it's really important. These are the top 9 stocks, in my opinion, that you pretty much have to own. Good morning. My name is Adam Kahn, and I'm not the rational investor, even though I'm the rational investor. This is Investing with Adam K. Today is Saturday, April 27th. I took a look before I said it, so I'm not sitting there trying to guess. I hope you're all doing well. I hope you're enjoying your weekend. Beautiful out here in Las Vegas, a tiny bit chilly, which is awesome. Sun's coming out, hummingbirds flying by, super cool. So I hope you're enjoying your day. Today I'm going to talk about 9 stocks that I really think you have to own in your portfolio. Now, this is not financial advice. You guys need to make your own decisions when making any financial choices for your lives. Everybody's at a different stage in their lives. Things make a difference depending on your age, how much money you have, and everything else. This is just the information that I use in my life. I hope you enjoy it. If you are, do me a favor, hit that thumbs up, subscribe, make some comments, tell me what you think about the list. So, I have a general philosophy of don't dig too deep. And as I go through these 9 stocks, I'm going to save the last one for one that I finally took my own advice because I feel like it's overpriced. I haven't wanted to buy it, but I finally sucked it up and bought it anyway. And I'm going to talk about how you ease into things like that, even when they're overpriced, because I think it's a stock you have to own. And I feel that way about all of them. Maybe some of them are overpriced right now, but I still think it's something you want to have because sometimes they never drop. Some of the best companies just go and go and go, and you constantly sit there watching them and never get into them. So let's start with number one, and they're in no order whatsoever. I really just wrote them down just as I thought of them. So number one on the list is Amazon. How could you not own Amazon? You probably use it, but part of what you may not know is Amazon Web Services is a huge part of their business that might be an even more valuable part. They do over 30% of the web hosting in the cloud space. And if you're opening a business, it's a way that you don't have to buy your own server and host your own data. You can just use their services, and it probably costs you a lot less money. They're also really good at what they do, and they're really good at that space, and they're number one in that field. That makes an incredible value. Amazon's the best of the best in my mind, and with all of these companies that I talk about, I want to own them until something fundamentally changes in them that makes it to where it's a different company that maybe I don't want to invest anymore. My time horizon is probably a minimum of 5 years with these things. So that's part of why I try not to worry about valuation today too much. Now, Amazon hasn't reported their earnings yet. They might have a pretty volatile week next week because of that. They could go up a bunch, they could go down a bunch, but I would want to have some money in it if I don't already. Um, if I was buying it ahead of the earnings, forgive me, I'm being presumptuous, and again, don't take my advice, but I don't think they're super overvalued here. I don't think they're a super bargain. But if I didn't have any money in it, whatever I wanted to eventually put in, I'd probably put 25% in just to make sure I had some skin in the game. There's one or two in here that I think are pretty good value at this point, and I might put all my money in. Amazon's in that middle range that I just, if I didn't own it, I would still want to put something in, but maybe not everything, especially in case the earnings come out and it comes down a whole bit. Based on what I've seen with the other stocks that have reported, my guess is probably the opposite, but I don't want to make a guess. I don't want to make those bets. I don't want people day trading or being too short term on all of it. Number two that I'm going to talk about is Meta. And what a great opportunity and great time to buy Meta. They reported earnings and they crushed it, but the stock dropped a good bit. It went from almost 500 a share, and at the lows, I think it traded down to maybe $415 a share. If I didn't own any Meta, I'd easily be putting 25% of my position in, if not 50. The risk here is the reason the stock went lower is he talked about spending another $10 billion on the metaverse and AI and things like that, which the market hated. The last time that happened, the stock fell from the highs, or it had already fallen before he started talking about that, but it fell to a low of somewhere around $80 a share. It was a huge drop. I mean, that fell from the high of the stock, I think at the time was around $340 a share. So that's a huge drop when he starts talking about the spending. The street didn't like how much he was spending on an unknown. The street never likes unknown. And I understand that the investors want guarantees, but what I think Mark Zuckerberg really saw is his primary business being Facebook and Instagram. Now, he's got great ancillary ones. I think there's amazing potential with WhatsApp. I think Oculus is huge, and that's going to be part of the metaverse. They have a lot of other industries as well that are really strong and have potential to grow. But I think what he saw is Facebook had already matured. My guess is, and this is really a guess, I don't work for the company. I tend not to delve into the numbers or anything else because I think it's a distraction and people can get overwhelmed with all of that and they can think too much and think a stock's undervalued or overvalued with that information, whereas price action and your overview of the company in general is probably more important. At least that's my thoughts. Anyway, my guess is that Facebook has slowed in terms of growth, and he's built it up so fast, he likes that the company's growing like that. I'm guessing he has the same concern about Instagram, which is social media. Every 20 to 30 years, as you cycle through another generation, the old one is no longer the in thing. So there has to be a new one constantly coming around that the younger generation uses because they just don't want to use what their parents use. You know, we used Facebook for a long time. The next generation gravitated towards Instagram. Now they're gravitating towards TikTok and maybe even Snapchat, because I know some of the younger kids use that. And maybe the next one will be something else. So I think he's concerned that the industry he's in will get stale over time. Now, he could turn his company into big and boring, where it just pays a dividend, which they did add, which that's pretty cool, but that was on the previous earnings, which is part of what shot it up. But the dividend, while it's nice, isn't what I really hope for. I want to see companies that grow. And I think the reason he got into the metaverse is he's making a bet that that could be the next big thing. And if you start thinking about it, it really could. I mean, imagine a world where your kid puts on an Oculus to go to school and gets taught by the greatest teachers there are. Or you're able to buy tickets to the Super Bowl and sit at the 50-yard line just by putting a headset on. Maybe you have friends over and whatever else, and there could be advertisements for Domino's to get pizza delivered at the halftime show or whatever it is that the world can change into. You know, I've even thought, how cool would it be to be able to do a tour of the Vatican? It could be two different options. One is a little bit less expensive, where you throw the Oculus on and it just goes through and tells you all about it. And the Vatican's just one example. It could be anything. But you just kind of go through and get to see it, and they talk about it and everything else, but you get the feel of actually being there. And then one that's much more expensive as the technology gets better and they're able to do live things like sports and whatever else, that you could actually do a small tour with your family where you pay more, but somebody's actually walking through and explaining it and telling you, so you could actually ask questions as well. Like, you could literally be somewhere else in the world and get to go and see it. Now, I get dizzy in some of this stuff. It's not easy for me. I've sat and watched some of the roller coaster ones, and it's it's terrible. But I've also gone and done some of the ones, like, I think it's really cool, the underwater ones where I get to feel the equivalent to scuba diving, because I hate, like, I love swimming and stuff, but I hate scuba diving. And if I do it on the Oculus, I love the concept, but I get a little claustrophobic. I get to be under there and I can see octopi and I can see all sorts of things up close. It's super cool. And I just envision the things that I think he envisions in the future. And I see how metaverse could, doesn't mean it will, be an avenue of new growth to build and grow the company in a way that people just don't even see it coming. So I understand it's a large bet. I understand that the street hates that he's spending money and they don't see it and it's stressful. So I could see some continued downturn in the stock. But I also think it's a great investment, and I don't think he's going to put the company out of business. If it doesn't work, he can still be that old stodgy cash cow paying a dividend, but he's taking a bet to try to make the stock grow. I see the stock falling as a really good opportunity to put some money in. It's my largest position, so it's very hard for me to add on to it. But if you don't have money in Meta, what a great chance this gives you. Just be careful. It really could have some significant follow through to the downside. As future quarters come along and they don't see the profits today, and he's continuing to spend money to build these infrastructure for these things, they may not like it and it may push the stock lower. I don't think that's a bad thing. It's why I wouldn't put my whole investment in now. At the same time, I definitely would want to have some money in Meta. It's just another one of those companies that I think you have to have money in. Try not to talk as long on the other stocks, but Meta's one it's near and dear to my heart. I see the vision and everything else. Number three that I'm going to talk about is Google. Came out with great earnings, crushed it. After that news, I mean, what, it couldn't have been but a couple of months ago about how they're going to lose 25% of their search revenue to AI and whatever else. And all I thought was, this is Google. Like, they have some of the best engineers in the world. I have to imagine they know what they're doing and they'll be able to compete in all the spaces that they compete in. Honestly, how can you not be invested in Google? Now, it's had a good run, similar to what I said about Amazon, other than their earnings have already come out. If I'm putting in, I'll make up a number so we can use dollars and not just percentages. Let's say each of them I want to put $10,000 in. If I wanted to have $10,000 in Google, there would be no reason I wouldn't put anywhere from $1,000 to $2,500 in today. And I wouldn't worry about the valuation. I just want to be invested in that company. It's a great company. And I have a Peter Lynch philosophy of buy great companies and give them the time they need. It's very hard to predict 10-year out earnings and how big a company will be in 5 or 10 years. This year, the next year, they have some clarity, but long term, it's very hard. Google's one of the best. I want to have money in them. It's really hard for me to see it any other way. And I've even worked on it myself. I've tried to consolidate into the companies that I think are the best and not be too spread out into ones that are guesses. I think it's really easy to find the ones right in front of our face instead of stretching and trying to search. Number four on that list fits exactly in that category, which is Microsoft. Pretty much anybody who has a computer is using Microsoft products, whether it's Word or Excel or whatever it is. And then they have a whole plethora of other things too. So how could you not be invested in Microsoft? And when they turn their model into you buy the system, you used to be, for those of you who don't know, you bought a disk or whatever it was, you uploaded it onto your computer, you paid, I don't know, $99 to buy Microsoft, and you put that in, and then you owned it. And then it got outdated. Once they changed to the subscription model, it was a way for them to drive their revenues better, and be a way for everybody to be on the newest and best platform instead of having something that might be 3 years old and didn't work with the new stuff. So it was a really smart way to change their billing, and it's created a way that they could actually increase revenues over time because all they have to do is raise that $1, and it's a significant percentage. If they go from $19.99 to $20.99, that's a 5% increase in pricing. While it's only $1 to most of us in the world, and we don't, nobody's ever happy when prices go up, percentage wise, that really helps them to be able to continue to grow into the future. And Microsoft runs a great company. It's one of those that, again, how do you not have it? Same thing, it might be a little bit pricey, but if I'm putting $10,000 in Microsoft, there would be no way that I wouldn't want to have at least $2,500 invested, even if I overpay, in preparation of the hope that maybe it comes back lower and I can add on and put the rest of the money in. Number 5 on my list is Tesla. Maybe a little controversial. I'm not a huge fan of Elon Musk. but I do think they're the best of the best in the auto industry. And I think there's a lot of things that give them an edge over everyone else that I've talked about in other videos, but I think it's really important. The other thing is they've had a lot of bad news. To be honest, if I was putting $10,000 in, if I didn't put 100% of it in before the earnings that just came out, I'd still be putting 75%. So if I wanted $10,000 into Tesla, I'd probably have 7,500 in today, very comfortably knowing it really might fall significantly from here because they're going through a transition of maturing, meaning they were a really good growth story for a long time, which drove the stock up a ton. They're going to have to settle down until there's a longer term understanding of how much they're able to grow revenues over time. That could hurt it from being able to grow significantly over the short run, and it might even mean lower prices. But they really are the best of the best, in my opinion, and you want to own it, and you might just have to go through a time frame of it not growing and growing and growing the way it did, because there's no way to sell $100,000 vehicles at the pace of growth that they were before. That is going to slow and it is going to mature. But what I love about the company is a few things. One, direct to consumer. There's no franchises, as I call them, which are the dealerships. So you don't have the middlemen that are rather expensive, that you're going to have to figure out something to be able to compete against the car company that can sell direct to consumer. That is a huge advantage. If you really think it through, those dealerships are really expensive. The other thing is those dealerships do the oil changes and repairs and everything else. That gives Tesla access to do their own repairs, which adds to their bottom line. It's a huge difference to these companies. The other thing about Tesla is they control the equivalent of the gas company by having all the charging stations. In fact, they're so good that other companies are working deals to be able to use their network of charging stations because they're so far ahead of the game. Another thing about Tesla that people don't really realize how big it is the self-driving. They have ability to have all of those cars on the road that they're able to get live data of versus putting a car on the road and driving around. That's hundreds of thousands or millions of cars really driving around that they're able to continue to grow that self-driving network and build a product to maybe in time compete with Uber. Like if they get to where cars can drive themselves, they can do taxi services, they can do delivery services. The people who already own the cars might be able to rent them back to Tesla to be used at the times when they're not using them. I mean, it really is amazing to think what they might be able to do with the cars already on the road. And they build the cars. So they're not a company just that's delivering and everything else. They don't need to go to another company to build the product to send the cars out. They do it already. Something a lot of people don't even realize is if you use non-Tesla parts to do repairs, you void the warranty. As opposed to like a Ford, you can use all sorts of different parts. So that's another stream of revenue that they're able to get 100% of the profits on. Well, 100% of the sale and whatever margins they have for the profits. So another aspect of Tesla is that they now actually sell insurance, auto insurance. And not only do they sell it, so for those of you who don't know, and not to overshare, but we have a couple of Teslas. The insurance is rather expensive. Well, somebody told me, well, check with Tesla. When I tell you it dropped like 70%, I went from spending six, seven, $800 a month for the two cars to 200 and change. And this wraps into their self-driving technology. It follows me and it records me and everything else, which impacts how much I pay. Now, fortunately, I drive like an 100-year-old grandpa. I think I'm pretty safe. I rate real well on the scale, but for two cars, we pay $220 a month. I think that's really reasonable for two nice cars. And man, another aspect of field that they're able to get into. I think all of these things give them a huge advantage over the other auto companies. I think they're the best of the best, whatever you think of Tesla. And I think when stocks fall and get out of favor, you still want to own these companies. So on to the next. Number 6 on the list is your choice of ExxonMobil or Chevron. I think you have to be in the oil and gas space. I think these are the two top companies. I think that not being in them is a mistake, even though cars are going to electric vehicles and everything else. There's so many companies that use oil and gas for shipping, flying. There's so many things that's still ingrained in. And I'm sure they're also working on renewable energy to compete in just the energy space, which I think is a really important place to be. So again, another ones that you almost have to have in your portfolio. Pick whichever one you like. I think they're both great companies, but one of either ExxonMobil or Chevron. They're great companies and they pay a decent dividend. Why wouldn't you have them in your portfolio? So, number 7 on my list, and definitely not least important, is Starbucks. You could also consider McDonald's, but I'll take Starbucks. This kind of gets you in the food and beverage space. I think they're at a great valuation right now, and they're just a company that I think you have to be in that space. They're well run. They've been struggling for long enough that it's time to put some money in. If I were investing $10,000, I would have, if not all $10,000, 7,500 of it in, and I'm happy that I'm getting my dividend. If it goes lower, it goes lower. But I think they're really ingrained in society, and what I like is the longevity of it. Now, I talk about my son from time to time, which, by the way, he got Student of the Month at a very tough school, so we're super proud of him. It was super cool. I actually didn't have time to do a video for a day because I was spending my time hanging out with him, which, thank God, I'm fortunate enough that I'm able to skip out and do that stuff. Anyway, Starbucks, the my son and his he doesn't go there so much just because he is who he is, but the friends he have, not only do a lot of them go to Starbucks, they know what drink they get. And if 11 and 12 and 13-year-old children know the drinks that they get at a place, well, when they're 25 years old, when they're 35 years old, maybe their drink choice changes, but my guess is they've already established their relationship with Starbucks and they will continue to order product from there, um, which I think gives Starbucks that longevity to continue for the next 20 or 30 years. I think that's super important for companies. And Starbucks, they run a great business and they're expanding across the globe. You know, we did a trip to Europe and I almost laughed because Europe has incredible coffee houses. But meanwhile, Starbucks was super busy. I think a little of the things that are hurting the company right now is they're worried about the unionization and they're worried about the prospects in China, which is I brought that up on purpose as I said Europe. You know, they have some stores in China, and my understanding is they have two of the largest stores literally across the street from each other, and both of them have lines out the door. So even though China has their own companies that are going to compete with Starbucks and probably even try to steal things from them and try to have lower prices and whatever else, Starbucks still has a demand. I think there's something about the brand name that people are going to want to go there even in China. The concern is, as we go into an economic war, maybe they put some things on them that make it really tough for them to do business there. But I'm guessing that's why the stock price has been struggling for a while, is all that stuff is really understood in it. They pay I think it's 3% or right around their dividend, which, you know, dividends are kind of silly, but I love them no matter how much I know that they're not necessarily the way to grow a business, but I like getting those dividend checks. So they pay a nice dividend. I think it's a good company. I think Starbucks is just one of those that in 20 years, whatever storms they're going through today, I'll be very happy I own. So, number 8 on my list, before I get to that last one, which is the one that I finally took my own advice and just bit the bullet and bought it, even though it's overpriced. Number 8 is Apple. Well, similarly, I had sold Apple not that long ago, but I do think it's one of the companies you really have to own. I feel like they haven't grown their earnings too well in the past few years, and they haven't come out with any products that have been unique or really pushing them ahead in technology and whatever else since the iPhone. They now have the new headset to compete with the Oculus. The problem is it's so expensive. I think that's got to be hurting sales. The interesting thing is Mark Zuckerberg tried it and really said it's much better than, or he said it's better than his product. They're different. I think that the Apple one is trying to have real world use, while the Oculus, I think, this is not knowledge based, is more of a toy and gaming one. But by owning Apple, it's almost like a hedge against the metaverse that I think one of them is going to succeed in that space and do well. The thing about Apple is if you're in the Apple universe, which my family is, it's hard to get out of it because once you get some movies and some other stuff and you use their phones, it's so easy to stay on their platform that you really don't think about changing to something else. Now, I think what's hurt the stock sales is since they don't have anything new and unique on the phones, we tend to keep them longer. There's no reason to upgrade when a new one comes out. The old ones are pretty good and work just fine. So I don't know about the future growth. I still think they're so well capitalized and they're such a good company and they're probably the best in their space. It's another one of those companies I just think you kind of have to own in your portfolio, which is why I bought the stock back, recognizing, even though I think maybe they're going through a time frame where they might struggle for a while, it really is one of the companies I feel like I have to own. Now, if I were wanting to put $10,000 into Apple, I'd probably put $5,000 here and just wait and give it time. And again, that's kind of that way. If it just starts going and going and going again, I have some money into it. But if it stalls or has trouble, I have the ability to add on at a lower price. And last and obviously not least is Costco. The reason I finally bit the bullet on Costco is when I recognized that, they don't even have 1,000 locations. They have 800 and some odd locations. I didn't realize how small they are despite being how big they are. And Costco really dominates the space that they're in. And I think that covers a huge realm of, grocery or whatever you want to consider it. And since there's only 800 location, that's huge potential to continue to grow over the next 10 years. The other thing that's really amazing about Costco is how well run they are and how busy, like every single Costco I go to is super busy no matter what time of day it is. So I don't know if they're just that good at their real estate picks or that there's only 800 and that's why they stay so busy or what it is about how they run their operation that they're able to be that crowded and do that well everywhere they open. The other thing I've noticed is they manage their cash registers incredibly well. No matter what time of day you go and no matter how busy they are, they seem to have the right amount of people handling the right amount of traffic. There's generally 3 or 4 people ahead of you. It's hard to find a line that's slow. And I think that's on purpose. If they start to get busier, it's amazing how quickly they'll adjust to open up more lines. The only times I see the lines like super long is when all the registers are opened up and they're just so busy it's hard to contain all the busyness. I think that's really impressive that a company can adjust all day, every day, throughout the day to be able to open up more cash registers to meet the demand like that. I'm not sure how they do that. That is not the same in other places. And even internationally, like sometimes we go and we visit Costco just out of curiosity. We went in Spain, same thing. Super crowded, great selections, really interesting. I've seen videos of ones in Japan that are the same way. They haven't even touched the surface in some of these countries. So that's why I think, geez, going forward, they really have the space to grow. Now, it's very hard for me to buy the company because I think it's super overvalued. But I bit the bullet myself the same way and bought somewhere between 5 and 10% of what I want to own in time because I just thought you want to own great companies. Costco is definitely one on my short list of companies that I think is the best of the best. and I didn't own it. So I finally took my own advice and just thought, you better buy something. Because if the stock price just never pulls back, I don't want to never own it. It's a great company. Now, notice on my list, I didn't put things like Palantir on there. These might be great companies, but I don't try to find the diamonds in the rough. Part of my whole concept is big, well-established companies that are still growing and the ones right in front of your face. I also didn't pick the old stodgy ones, which I think are great companies for retirement. But my concern with a company like Coca-Cola, and I don't know, maybe it's the greatest thing ever, is where's their potential for actually growing over the next 5 or 10 years? Maybe they can raise the prices of their beverages and increase their profits that way. But I don't see the same ability to stretch into new places or expand their reach because they're already established like that. There's nothing wrong with those companies. There's a lot of great companies out there. I just picked the ones that I thought were still growing. The cool thing is both Google and Meta just added a dividend. So as much as I shouldn't care about dividends because I know better, I love dividends. I just do, and I want to. I'm actually a sucker for yield, so it's kind of funny that I'm making those references because their yield is so small. But a lot of the ones on my list now have dividends. I mean, Microsoft pays a dividend, Apple pays a dividend. The only one I think that doesn't is Amazon, who's reporting next week, and I think they're now going to feel pressure since Google and Meta have added it. They may not add it this coming week, but maybe in time after their competitors do, maybe they do too. Oh, yeah, and Tesla doesn't have a dividend either. Anyway, I know this was a long video. I really think these are 9 stocks that somebody really has to have in their portfolio. Let me know your stocks that you guys think are must-haves that I might have overlooked or forgotten. Maybe the gas and oil space and maybe Starbucks were a bit of a stretch. I just think they're great companies. The other ones, it's like, how do you not own Meta and Amazon and Google and Microsoft and Tesla in your portfolio? Great companies, and if our economy continues to grow, you want to be in these spaces. Anyway, once again, do me a favor, thumbs up, like, subscribe, make some comments, maybe share the video with your friends. I really appreciate the support. I can't believe how much the channel's been growing the past few months. It's really cool to see. So thank you guys. I appreciate it.